which looks at the international work streams around payments. As you know, the FSB and CPMI has been working on a roadmap to cross-border payments. And it's always good to kind of look beyond Europe. And what we've discussed over the last 2 days fits nicely into this roadmap and the various recommended policy actions that are being assessed by the FSB and CPMI. And we therefore thought it would be good to kind of take stock and see how the work is progressing. And we're absolutely delighted that Thomas Lammer is with us, who's the deputy head of the Secretariat of CPMI, who has kindly agreed to give us a sense of the work around this roadmap and also a little bit how the non-bank payment sector fits into it. And before I pass over to him, just to remind you again that we do have Q&A possibilities. So if you do just leave a question, I'm happy to see whether we can find some time at the end to ask Thomas 1 or 2 questions. But with that, Thomas, welcome being with us. And actually, I know you've got a few slides, so maybe we bring those up and you can kind of lead us through this part.
Thank you very much for this nice introduction. And I'm absolutely delighted to present the G20 cross-border payments roadmap, the status quo, and which progress we have made over the past year to this distinguished audience. It's really, I think, a very fitting topic since many of you are active in the field of cross-border payments and I'd say have contributed to many of the improvements we have seen over the past years. And still, we are observing challenges in that field when it comes to cross-border payments. And they are typically more costly, slower, they are more difficult to access, and they are also less transparent than comparable domestic payments. And some would even argue that over the past years, this gap has widened in view of the experience we are enjoying to a large extent in domestic markets, for example, with instant payment systems having been taken up in 60 plus countries around the globe. We can go to the next slide. And some of you, or hopefully many of you, might have already seen this chart. This is really kind of trying to bring together the challenges and the frictions we are currently trying to address with the G20 cross-border payment roadmap. And we, if I say we, it's not only the public sector, but we are really keen to get the buy-in and the commitment and the action by the private sector, be it banks or non-banks. And therefore, I'm delighted also to kind of give this update to you and also stand ready to answer some questions. Just a short recap. In 2020, Saudi Arabian G20 presidency made cross-border payment a priority and requested the Financial Stability Board, FSB, in coordination with the Committee on Payment and Market Infrastructures and other standard-setting bodies like FATF, like BCBS, and international organizations like the International Monetary Fund or the World Bank, to come up with a roadmap to address these pertinent challenges and frictions in cross-border payments. So this was the first stage, and I'll not go through that slide in detail, but I think many of these the pain points that are on this slide are part of your day-to-day business. Fragmented and truncated data formats, limited operating hours, legacy technology, long transaction chains, funding costs, weak competition, and also the issue about complex processing of compliance checks. So it's something that is, I think, at the core of the challenge we are trying to address. So this was the stage 1 in the 3-stage process until we finally got to the roadmap. Stage 2, and we can move to the next slide, was led by the Committee on Payments and Market Infrastructures, the CPMI, again in coordination with the other standard-setting bodies and international organizations. And we came up with a, let's say, set of building blocks, as we call them, to address these challenges. So these building blocks are across 5 what we call focus areas. One is the public and private sector commitment, regulatory, supervisory, and oversight frameworks. Then how to improve, enhance existing payment infrastructures and arrangements. What about data and market practices? And last but not least, the focus area that cannot we missed in these days is about new payment infrastructure and arrangements. And there we are looking into new multilateral payment platforms. We're looking into central bank digital currencies, CBDCs, as well as global stablecoin arrangements. Altogether, these 19 building blocks are a kind of set of areas where we think that this kind of multidimensional problem we are currently facing could be addressed with such a comprehensive approach or comprehensive solution. We were therefore happy to see that all these 19 building blocks were taken up and were then considered by the Financial Stability Board in the final roadmap that was presented to the G20 and 2020, and then also endorsed by the G20 leaders. We can go to the next slide. The roadmap assigns responsibilities to international organizations and standard setting bodies to kind of take the lead and bring these building blocks forward. But as said, this is nothing which can be done in isolation. As you can see on this slide, and we became quite used over the past year or so to kind of talk into numbers in this context. So if we talk about building block 10, it's about access to payment systems. Building block 13, it's about interlinking. So I have to be careful not to kind of go into that direction during the presentation, but these 19 building blocks are further developed and kind of implemented under the leadership of the respective organizations you can see on this slide. So it's a Financial Action Task Force that is leading one building block. International Monetary Fund and World Bank is leading building block 7 on safe payment corridors. FSB is having the lead or co-lead on 7 of the building blocks, and BIS Innovation Hub cooperates on 2 of them. And we as CPMI, we are leading or co-leading 11 out of the 19 building blocks. We can go to the next slide. So enough of the past, if I may say so, kind of now fast forward to present times and also where we currently stand. So this slide is one of the outputs of one of the building blocks, building block 1, and it shows that the targets that we are now have now defined and have been endorsed by the G20 leaders end of October in the Rome summit. So work in 2020, 2021 has really primarily focused on laying the foundational elements for the future roadmap actions. So for the more forward-looking actions in the roadmap. And the key part of that foundation was especially the publication of specific quantitative targets across the different payment segments the roadmap is looking at. These are wholesale payments, so typical payments between one financial institution and the other. Then retail payments. This includes, in the definition, business-to-business payments, consumer payments, to businesses, person-to-person payments, other than remittances, because remittances has been singled out by the roadmap. So if we talk about international remittances, this is another category within the roadmap. So the targets themselves, as you can see it in the summary here, they try to specifically address the 4 challenges we have identified before: cost, speed, transparency, and access. And they, some might say, are quite ambitious. Others might say they probably could be more ambitious. So I think the objective was to have ambitious but realistic targets that could be brought forward and implemented. And the timeline for implementing these targets is about 5 years. So it's 5 to 6 years, and 2027 is the deadline for most of these targets, except from the targets on remittance costs. So there we have the well-known UN Sustainable Development Goal objective of 3%. So this has been kind of taken over in this context and included in these targets. For the other payment segments, wholesale payments, and as well as the retail payments, as said, the targets are by the end of 2027. So for retail payments, there's been a target set that they should not be on average. On average, it should not cost more than 1% by that date. There's a speed target that 75% of the payments should be effected within 1 hour, the rest of within 1 business day. There are minimum defined list of information that has been set in this target in order to enhance transparency and also to improve access, to have at least 1 option per payment corridor when it comes to wholesale payments, that all end users have at least 1 option to make cross-border payments to businesses, and also in the context of remittances, that 90% of the remittances have access, of those that remittances can be conducted via electronic means. So there is a specific report that kind of defines in more detail these targets. If you have not already seen them, it's definitely recommended to have a look at them. And these targets will play an important role in defining the ambition of the work and also creating accountability when we go forward. The targets will be made fully operational next year through the development of an implementation approach and the monitoring approach to how we progress towards them. We can go to the next slide. And here I only list the deliverables the CPMI has led over the past year. As said before, these are very often foundational, let's say, actions by taking stock, by assessing existing systems in order to, in a second action, as you can see in the roadmap, build on them by developing best practices, by developing guidance in this regard. So it has been quite a busy year at our end, but also not also at our end, but across all those institutions that have been involved in the implementation of the roadmap. And most of the milestones that have been set in the roadmap have been successfully completed or are close to finalization. However, as you can see in the progress report that was published at the beginning of October by the Financial Stability Board, we also have to admit that due to the breadth and also of the work underway, and also the recognition that stakeholder involvement is really key, and for example, public consultations need to be done, workshops need to be done, and so on, that some of the timelines had to be extended. But what also the progress report states is that the end goals of the overall roadmap remain firmly on track. So the first year was, as said, on foundational elements, and these topics have covered a diversity of topics. So only in our case, in the case of the CPMI, we have been looking into the operating hours and also the access to payment systems. We conducted a survey among 60 plus central banks across the globe, covering several hundred of payment systems. Then we looked into common elements of service level agreements and schemes. For that, we reached out to the governance bodies of payment schemes, to the owners of service level agreements to get their inputs. We took stock of the payment versus payment mechanisms that are out here, and to the extent to which extent they used. Interlinking of payment system was another area we took stock of, and CBDC design, or central bank digital currency design, was yet another one. The work as such will provide a strong basis for us to really go forward. And I'll kind of touch base on 1 or 2 of these building blocks on my subsequent slides. But as you will see also from the roadmap and from the progress report, a lot of this will then kind of, as we take it forward, be part of some of the of this guidance or these best practices that are being put out. We can go to the next slide. So just to pick one of the building blocks we have been working on. This is building block 12, which is about extending and aligning operating hours of key payment systems to allow also overlapping across jurisdictions and time zones. And the payment systems obviously play a key role in the processing of cross-border payments, and especially the real-time gross settlement systems, often operated by central banks, are key payment infrastructures in this regard. And of course, if the operating hours don't overlap and across the different jurisdictions or time zones, that of course would very often have an immediate impact on the speed of transaction, be it in the wholesale part or by extension also in the retail segment. So therefore, this building block aims to expand the operating hours, extend the operating hours, and also to ensure that they are aligned. We analyzed for that purpose more than 60 real-time gross settlement systems really across the globe, not only CPMI jurisdictions, but also a vast majority of non-CPMI jurisdictions, and the gaps we identified are briefly explained here. So certain jurisdiction pairs really have gaps of 20 hours per day or more. And of course, it also depends whether you go with the sun or against the sun. But for an end user, this should not be a criteria whether or not he or she can expect the payment to be delivered on time or not. Of course, from a weekly perspective, since a lot of these systems are not yet operational 24 hours and or on weekends, this is even more severe, this kind of these gaps. And the survey also indicates that the capability to extend operating hours is there, but of course, that this also comes with a whole lot of other considerations, like operational costs, operational risk, and the like, for which reason few jurisdictions have currently specific plans to do so. Having said this, this report will soon become available to the public, and we are seeking for comments in the context of the public consultation in this regard, and hope to also that many of you would take this opportunity to kind of respond to the questions we are raising in this specific report. We can go to the next slide. One other report we already published together with the PIS Innovation Hub, but also the World Bank and the International Monetary Fund, was about factoring an international dimension into CBDC design. And as we know to date, no major jurisdictions has launched the CBDC, and many of the design and policy decisions are still unresolved. So nonetheless, central banks recognize really the implications CBDC might have well beyond their domestic borders. So highlighting the need for multilateral collaboration in this regard was key to that report, and also it looked into macro-financial questions and the importance of interoperability between CBDCs. This report comes up with 3 models, one of them requiring little to no coordination between the central banks if the CBDC is just kind of open or accessible to residents and non-residents, irrespective of location, could theoretically also be used for cross-border payments. But kind of more, let's say, structured models would be interlinking CBDC systems and in a certain instance to come up with some kind of model in this regard where CBDCs are issued by a single system. So this report looks into this topic, and there will be a subsequent report, which is due mid-2022, which will go a step deeper and look into design and technical considerations. Just 2 examples of the work we have done. There's more to become, and you can also have get some more insights if you look into the progress report published by the FSB. For the benefit of time, I'll move on to the next slide, which is about what is ahead of us. And again, this focuses mainly because by mistake there's also building block 16 on it, but it focuses on the CPMI-led building blocks. So all of these deliverables, except from those for building block 16, are led by the CPMI going forward. And as you will see, as you can see, it's a quite intensive year that's ahead of us, and we're really keen to kind of engage going forward when it comes to public consultation workshops and the like, to get also your input on these deliverables that will be brought forward over the next year. So the success as such of the work will heavily really depend on the availability and willingness of the authorities and the private sector to engage really constructively in policy discussions on the advancements and that are required to achieve those targets, and to commit to implementing the agreed targets in the subsequent years. And it's also a kind of call to action, if you will, that it will require both the public and private sector to bring this ambitious but worthwhile objective forward to really enhance the cross-border payments and to work towards the targets in this regard. One, let's say, recommendation and also kind of advertisement, I'd say, for the work we are doing. We have just launched a kind of landing page. If we go to the next slide, where we try to compile all the developments, not only by the CPMI-led building blocks, but also by the work done by others in a kind of one-stop shop. So it will be further populated and enhanced going forward. But this would be one of the key places to go if you want to stay updated, want to be informed about surveys that are going to be launched, call for interest to join, for example, task forces or workshops and things the like. I'll stop short here for the benefit of time and hope there'll be a couple of minutes to answer some of your questions.
Thank you very much indeed, Thomas, for this very interesting presentation and overview. Because as you say, actually, even in the type of issues identified, actually a lot of them have come up in different forms in the course of the last 2 days. And if I focus just on the CPMI dimension, because it's interesting, of course, we just had panel and AML, that's kind of the FATF. We look at remittances and remittance corridors, and that is, as you said, the World Bank, and there are other areas. But if you look at some of the CPMI issues, what have been your first conclusions about access, for example, to payment systems? It's been one of the issues that is very important for the non-bank payment sector, that basically at the moment often these intrabank payment systems, as the name says, are limited to banks. How do you see that? Has that been discussed at the global level, how to bring the non-bank payment sector more into things, while at the same time ensuring the stability and integrity of those systems?
Thank you very much. And yes, this is one of the building blocks indeed that we are leading. It's about, this is building block 10. And we, for the purpose of that building block, we have looked at probably those payment systems that are most difficult, if I may say so, to access for non-banks, which are real-time gross settlement systems. So we, in this context, conducted a survey among 82 jurisdictions, or 82 central banks have answered to the survey we had, and also really held focused discussion on a local level via our working group, workstream members with selected non-bank payment service providers. So all of this has informed the work, or this Action 1 stock take, and we are now working on the Action 2 report, which is due to be published in April next year, which will look into what the roadmap defines as best practices in access to payment systems. For that, of course, these best practices will be heavily informed by the stock take we took. So that covered, as mentioned, 80 plus jurisdictions, and the survey findings really contributed to our understanding of the potential benefits of expanding access to the, but also to non-bank payment service provider is one category. Foreign banks is another category, a form of, and possibly the most complex kind of challenge that is faced by, for example, foreign non-bank payment service providers. So all of this is currently being looked at. In general, we found that obviously, I mean, that's not a surprise, that access to RTGS systems is typically granted to the resident banks, but the eligibility for other potential providers of cross-border payment services, including obviously non-bank payment service providers, is much more restricted. There seemed to be an increasing demand for access, but so far, not many jurisdictions have yet kind of expanded access to payment systems to a broader set of providers. Of course, we are also looking into the benefits of broadening this access, but also, I mean, this could, of course, efficiency, improved efficiency, competition, innovation. I don't have to kind of mention all of them. They're well known to all of you. But there are also challenges in this regard we are looking into, which can be legal challenges, regulatory challenges, financial operational challenges, but also technological challenges. At both ends, it can be at the end of the payment system operator, but also the entity that is interested in accessing these payment systems. So next to the benefits, of course, is expanding access, as you might guess, also entails risks, and it's really important to look at both sides of the virtual coin in this regard, and to have them balanced. So this will be the aim for these best practices. And in this regard, we also plan to reach out again to stakeholders in order to test a bit the best practices we're currently working on. But for that, specific dates still have to be defined. But I'm happy to kind of keep it in the loop on this as soon as we have more concrete details on dates and formats in this regard.
Perfect, thank you, and I very much appreciate that, because it's an important issue, because it ties into CBDC and it ties into the broader de-risking debate and some of the other initiatives you're working on. Of course, they're all kind of connected. But the question that came in from Lozano, apologies, is an interesting one, which is, the question is, how does the work of the roadmap ripple into the domestic payment markets? Because if you look at certain targets in the cross-border context, but they might not even be met, those ambitious targets that you set out by 2027 in some of the domestic markets at the moment. You know, how can we, on the building block approach, build on something that might not always be in place at the moment? So how do you kind of manage the relationship between cross-border and domestic? It's a very, not an easy one, but a very interesting question, Thomas.
No, indeed, and it's a challenging question, but a very good one. I mean, if we talk about cross-border payments, I mean, very often we're talking about two domestic payment systems or payment ecosystems that are then connected by one way or the other. I mean, we know the traditional routes like correspondent banking, but obviously there are also kind of new, more, let's say innovative or newer approaches in this regard. So I think it's key that the improvement of cross-border payments to some extent goes hand in hand, or is also dependent on improvements in domestic payments. Because if you look at into access to payment systems, this is something that is of there are only so many payment systems that have a clear cross-border focus. I mean, many of those are domestic payment systems that can be either accessed by international players in this field, big transaction banks, money transfer operators that are operational in more than 2 or more jurisdictions, and so on and so forth. Interlinking those payment systems could be a way forward. It's also one of the building blocks we're looking at. But yes, so if you will, say one is dependent on the other, but also hopefully one will also facilitate developments and improvements of the other in this regard. It's of course difficult to say to which extent or what would be the kind of leverage in this regard, and what to which extent this kind of improvements also kind of translate into domestic payment improvements. But of course, I think we cannot look at cross-border payments in isolation, especially since the first and last mile is de facto a domestic payment. It's a kind of, well, not a very concrete or specific answer, I have to admit, but it's an interesting question, but one that is difficult to answer.
No, that's true, but in a way it is interesting for us, because in a way, as you say, part of the reason why it was nice to have here at the end is to look into cross-border, but also how those global initiatives come back into the, in our case, European policy context. And there is a strong alignment. Obviously, the same individuals sitting in some of the international working groups and some of the regional ones. So we very much appreciate that. And yes, I take a very close note of your invitation for 2022 for participants, our own association, but also other participants, to take part in these various working groups. And I can speak for EPIF, we would be very delighted to take part in them and take that very seriously. And
so that would be kind of, I mean, we will have, as indicated also in the roadmap, we'll have a call, we will have established an industry group or a task force when it comes to service level agreement, service levels, Building Block 3 in 2022. And there'll also be workshops in that field that across different building blocks, where definitely the view of non-banks is very important, and we're very much looking forward to you and your members to attend one or the other workshops.
Thank you very much. That sounds very good.